We are going to talk about funding. You know, and I would say M&As, we had Anthony Eisen from Afterpay on earlier. You know, he knew a little bit of M&A. Michelle, please come on up as I introduce our next panel. Now, Michelle, who you just saw there, is the Head of Investments at LaunchVic, which I will quickly plug as the winner of the Startup Daily Get Shit Done Award at the recent Startup Daily Awards. So congratulations to LaunchVic. Yep, Investor of the Year, and of course along with Matt from Birchal, who was also a finalist and highly commended recipient. I have to say they weren't my choices, but we had some excellent and wise judges who did do that. Cheryl is another, so there's a lot of shit happening here on this actual bench, isn't there, now that I think about it, because as the Aussie Angels founder, she was another one of our GSD nominees. And she's a very busy woman. We were talking last night, and if you've got nothing else to do, and I think it's October the 4th, tune into the parliamentary website when Cheryl will be talking to the Joint Parliamentary Committee on Financial Services about the sophisticated investor test. She's been called as a witness. I think it's fantastic because she has been such a strong advocate on this space. We wish you all the best, and we know we'll all be behind you on that one. And finally, Percy Hung is the CEO and co-founder of Choco Up, a leading Asia-Pacific revenue-based financing platform. He drives sales, marketing and strategy, leveraging tech for innovative, data-driven funding solutions. Ladies and gentlemen, let's talk cash. Over to you, Michelle. Give them a hand.
Thank you, Simon. Good afternoon, everyone. My name is Michelle. My day job, you get to see a lot of investors, a lot of founders, and a lot of ecosystem champions. So that's why I am so excited to see the panel today. I think you have a perfect selection of different avenue of startup support and infrastructure. We got crowdfunding, we got angel investing, and we got revenue-based financing. So the way that I would like to do it today is more conversational. I would like to hear from all the panel if possible. But before we start, could I hear a bit more about your background, how you started, and especially your why? Why do you want to do what you do?
Go, Matt.
I'm co-founder and CEO of Birchal. We're a crowdsourced funding platform. We help companies tell stories, build communities, and raise capital online. I was super inspired by what was happening in the UK in equity crowdfunding. The UK is the largest equity crowdfunding industry, most mature in the world. Some recent successes, Revolut, they raised their earliest rounds of capital on a crowdfunding platform in the UK called Crowdcube. And now I think the biggest, most valuable startup in Europe, 40,000% return for those early investors in Revolut. So we can dare to dream in Australia that this is the way that startups will be funded in future, and Birchal's hosted over 280 successful offers, 210 million invested through the platform. A few fintechs we've helped raise capital for, and I have a high conviction that this is the way that early stage businesses will be funded, and that every offer should be a crowdsourced funding offer. So.
Yes, nice. Cheryl?
Yes, awesome. Hey everyone, I'm Cheryl Mack. I'm the founder and CEO of Aussie Angels. We are in a very similar bucket in that I really believe that access to this asset class, i.e. early stage venture, is something that everyone should have access to if they want to start investing in this asset class. I'm not saying everyone should, but I think the power of individual investors to support founders at that earliest stage is so impactful. And so the platform that I manage is to help investors get into those early rounds, but also to help investors run their own angel syndicates and funds. And when I say funds, I actually mean micro funds, not like the big VC funds, but where the big VC funds started when they were much smaller, and it was much harder to do so. So that's what we do. We've run about 100 deals at this stage, not 210 million, but we'll get there. And we've co-invested in a number of things. And I think that there is so many opportunities to power founders at that earliest stage. and we're just super excited to be a part of it.
I think Cheryl is really underselling herself there. I would like to, unpack a few more things that she does in the ecosystem. But if you're in startup ecosystem and you haven't heard of Cheryl Mack, you probably live under the rock.
Way too generous. You're up.
All right. Hi, guys. I'm Percy. We started in 2018. The reason why we started, because I was a SME owner. I ran e-commerce store, I did retail businesses, and I started a marketplace. But the biggest problem was we couldn't get funding quickly and easily to scale the business. So we thought about, hey, how can we get easy access of funding through data or for asset-like businesses? A lot of tech startups, a lot of business nowadays, they don't have 20 years of operating history. They don't have assets backed where they can go to a bank for a loan, or if they go to a VC or angel fund, the process might take a little longer. So different businesses, different startup, they need different kind of capital because business is dynamic, it's fluid, right? So we work with a lot of VC, a lot of angel funds, a lot of other credit providers to provide shorter tenured but flexible and quick access to capital to bridge the round, to help them to grow from seed round to pre-A to A, etc. So we are more like a product that can help the other funders, to help their customers as well. So we're quite flexible, and we come in a time and space where we don't have to go through 3-4 months of due diligence or tons of paperwork. It's pretty much leveraging on data through your Amazon store, through your offline POS system, through Xero QuickBooks, through your Google or Facebook ad data as well. So we just want to help because I've been through that journey of not being able to access working capital to grow the business. And a lot of our partners are VCs and other private credits because the mandate is a bit different, so we can help each other. That's what we do.
Amazing. I would like to touch on that point a bit later on. But I'm curious about how you get here. Can you tell us more of back in the day when you first started? What was this like? What was the investment space like for you?
Okay, for myself, I'm not from the finance space. I'm an engineer by trade, but all I know is, hey, I want to grow my SKU. I want to go from 1 store to 2 store. I want to purchase a machinery to increase productivity. But where does this money come from? Being a young business, it's very hard. So I start borrowing money. Friends and family, go to the VCs, going to private credit. And each has its own pros and cons. So, and hence, we thought, hey, and in 2018, 19, and 20, there's a lot of, what do you call that? The early days is called merchant cash advance. The name doesn't sound as cool. And then slowly it morphed to revenue-based financing. So as long as your business has recurring revenue, we can give you some kind of credit line. I think sometimes as a business, you just need that 3-4 months bridge or 6 months bridge. You don't need something from a bank where you go for 12, 24, 36 months kind of tenor. Yep.
Amazing. What about you, Cheryl? What was this like?
So I started angel investing about 5 years ago, and at the time there was very little that you could just join. There was no Airtree Explorers program. There was no First Believers. There was a few courses in the US, but that just didn't feel like it fit. There's a few angel groups. There's still the location-based ones like Sydney Angels, but and apologies if there's any Sydney Angels people here, but they weren't exactly very welcoming for me and others like me. They are more now, which is good. But yeah, so I found it really difficult. And one of the things that I was told in the early days was when you don't know what you're doing, try to follow people that you trust. So find other investors that you trust and then try to get your check in alongside theirs. And so I spent my early days just pestering my investor friends, being like, hey, what are you investing in? Can I get in on that? Can I put my check in alongside yours? And they'd be like, I don't know, your check size is kind of small. And I don't know if you add any value yet because you haven't invested in anything, so hard to tell. And I'd be like, oh, okay, but can I? So I did manage to talk my way onto a number of cap tables, for better or for worse. Hopefully those founders actually do find value in me now. But then, yeah, fast forward a couple years, and I started getting investors coming to me, being like, hey, Cheryl, what are you investing in? How do I get in on that? And that's how we ended up here. Now I run a syndicate platform, and I run my own syndicate, and some couple hundred odd people follow what I invest in for better or for worse. We'll see how it turns out.
Amazing. What are your story, Matt?
So I'm a lawyer by trade.
We don't hold that against him.
Yeah. Reformed. I escaped.
Recovering.
Yeah. No, so among other things, I would help companies raise equity capital and see the cost. Teams of people, hundreds of thousands of dollars in professional fees. But there's incredible power of being able to make an offer of securities to the public. So I was inspired by what was happening overseas. And when there was some conversation about Australia having an equity crowdfunding industry, I needed to be a part of that. That was something I wanted to be a part of. I'm an entrepreneur. My father's a chef, restaurateur, so been interested in food and around people starting businesses my whole life. And I find my job incredibly fulfilling. I get to spend time with founders every day. And when we launched the platform, we decided to focus on the founder side. So making the process as simple and efficient as possible for them. And that's what we do, is we unlock a national pool of capital for founders. And we found it challenging to raise capital ourselves. We went to the investors, the traditional funders of innovative businesses, and we weren't able to raise capital, so we're pretty much bootstrapped. But we've used our own platform to raise capital twice now with great success.
So good, yeah. So jump back to the now, and Percy, you touched on that earlier. I'm curious to see what the benefits of, say, going to revenue-based finance or angel investing or crowdfunding, what are the benefit and why does it make sense in different stages?
Okay, I'll get started. I think a business, you have different needs at different stages. Ideation stage, pre-revenue, you definitely need support from the angel or the seed round investors, where they believe in your product or ideas, right? And our mandates are a little different. Your LPs or GPs, so-called, that put money with you guys, they expect a certain return, maybe 10x in 5 years or something like that. But for us, we behave like a debt structure. So it we can help. So we want our mandates to help customers, our clients, whether you're SME, online, digital business, or even up to pre-IPO level companies, to spike their growth. Because when they spike their growth, improve their top line, then their valuation could, be higher, or they can have a more robust fundraising roadmap to go to investor. Which in return, if you have invested, in early stage, the return could be higher. So we try to make it a win-win-win situation for the equity investor, for the customer themselves, and obviously for us, because we predict, we have our own algo to predict the revenue for this company or startup for the next 3, 6 to 12 months. It's a lot easier to predict a company's, to forecast 3 to 12 months compared to 2, 3 years down the road, which is what you guys are good at. And we're not good at that, so we just stick to our
I'm good at it.
Better than us. So we're focusing on those that's around between 6 to 12 months type of forecasting, yeah.
So I'll start by saying angel investors can be, the good ones at least, can be incredibly helpful for an early stage business. And they are typically people that have gotten into investing not because they just want to generate a lot of money, because I promise you there are probably much easier ways to do that than taking huge risk on early stage venture, but it's super fun. So angels generally get into it because they do want to be helpful, they do want to be supportive, and they typically have a specific skill set. So it could be that maybe they're a lawyer, or they have a really deep background background in a particular field like financial services or something as niche as like biotech engineering, and they want to offer those skill sets to founders. The reason that we do that is because we think we can have influence on the outcome. So it's not just I give you money and hope that I get an outcome, it's I give you money and then I also unlock opportunities in terms of making connections, making introductions to potential customers, or giving you my experience, which could be valuable. Let's say I'm really experienced in a particular field, and I go, cool, well, this is everything I know about that. Hopefully that's helpful. And that expertise or that support that I provide hopefully has an influence on the outcome and means that I am going to get a better return. So that's kind of the basic theory of like why any of us angel invest. But on the flip side, the benefits there are if you are taking angel money, you are not just getting money for your company in exchange for equity, you're also getting that person's time and effort to support you in your growth. What I run is I run a syndicate, which means that you get a whole bunch of helpful angels, but without all the admin involved of managing a bunch of helpful angels. Which I think is pretty cool. We typically operate at like the slightly, so we're only for wholesale investors, which is slightly different. Matt will tell you a lot more about how they're super helpful. But the check sizes are slightly bigger, which just means that you have angels that are writing like 10 to 50K checks rather than super small checks. But they can, yeah, I think both are super valuable in different ways. Yeah.
The benefits of crowdfunding. Look, I think what we do is best understood as a vehicle to aggregate multiple types of investors rather than a discrete source of funding. So yes, it's retail, but it is a retail and wholesale regime. The largest single investment we've facilitated on the platform is $1 million. And that was in response to a Facebook ad where the person was expressing interest to invest $10,000. They were in the process of setting up a family office, and then they invested $1 million. That was pretty early in our journey, and it showed that being able to market and offer to a national audience means that you can touch many people that find these opportunities interesting. There's 10 million investors in Australia, so I'd say that's probably the core benefit. Is the only way that you can access an audience of that size is through the crowdsourced funding regime.
Makes sense. So, fast forward in the future, what do you see in terms of evolving in each of these platforms? We got different way to access the capital. We got crowdfunding, angel investing, and revenue-based finance. Do you see it's going to be the same, less, more? How it's going to play out in your eyes?
For me, I think the future involves a lot more diversity, both within the Aussie Angels platform, but also I think across the country in our geography, just creating more diversity in terms of the type of capital that founders can access. If we look to some of our overseas jurisdictions, there are lots and lots of options for angel investors, for revenue-based financing, different types of credit funds. Like just the diversity there is much larger. And I think as our ecosystem matures, I would love to see a lot more of that. In my own, like what I run with Aussie Angels, I think there is still so much diversity that we can create. Like sector-specific syndicates, we do have some of that, but like there should be one for every sector, and then there should be one for every stage. Everything from like a pre-seed climate tech syndicate to a like Series B FinTech syndicate. Like there's no reason that we can't have that diversity.
Yeah, agree totally. I think Australia has evolved so quickly in terms of landscape, in terms of BC landscape. But we had been a journalist for quite a while. In the last 5 years, we're still finding our feet, and I see more and more specialized in each vertical, in each stage, just like what you just said. Yeah, absolutely. Do you see the same, Matt and Percy?
Totally. Like the startup and innovation ecosystem over the last 10 years, the growth has been phenomenal. But from where we sit, there are so many people that are interested in investing in businesses that will never come to an event like this. They won't be part of an angel syndicate. They're not plugged into the ecosystem. So obviously, I'm a hammer. Everything kind of looks like a nail, right? For me, the crowdsourced funding regime is the answer, because we're making these businesses accessible to people that are interested in investing in them. And we need to stop, investing in, property, blue chip stocks, mining. We've got a huge business in Western Australia. We have 10,000 investors on our platform that are based in Western Australia. And the acceleration of that ecosystem over the last few years has been phenomenal. And that's an exciting opportunity. People knowing that if they've got a great idea, they want to start a business, that there is going to be capital available for them. And I'm super optimistic.
Make it super accessible to every day. Yeah. Is the same for your
No, I totally agree. Like the need and want for different type of financing and funding, it's only going to increase over time in the next 3, 5, 10 years. Just my own personal experience, when I was brought up during my era, my parents just say, hey, study well, go to a good uni, get a good job, and that's it. Don't try anything funny. But now, people on our team, I believe on our team, they're very daring. They're willing to venture out. They're willing to take risk. They're willing to start something. And we have seen this, especially over COVID, digitalization of different businesses, existing business or new ventures. It's just started popping up left and right in different continents. So the need of financing and funding, be it in equity form or debt form, it's really trending. So I believe like banks are not willing, or financial institutes are not, because they've been making money over the past, I don't know how many years, right? So there's no need to reinvent the wheel. And that's why we have an opportunity to grow with the newer generation, with the new economy that's gonna propel us forward together. Yeah.
I love that. All right, we got 5 minutes, and I would like to close off with lightning rounds. In about less than a minute, I would like to hear from each panel. If I could ask your wish list, what would that be?
Sorry, ask
your wish list. What would you like to see more in the space?
In what way? More of what?
Open question. You can interpret personally what you do or overall Australian landscape.
I'll go first. We want 2 things. We want better tax incentives for retail investors. I think a lot of the incentives that are available for people investing in early stage businesses are geared towards wholesale investors, and we need to level the playing field. And we've got some specific asks to government.
Intersekt.
Yeah. The other is crowdsourced funding has shown that we can help companies raise capital from the public with appropriate consumer protections. But investment companies are excluded from crowdsourced funding. We think that there is a huge opportunity to help smaller funds to raise through crowdsourced funding from retail and wholesale investors as well. Similar things exist overseas in the UK. The crowdsourced funding regime has been a real success. Innovative consumer protections. So really kind of busting it open to support emerging fund managers is probably the other ask.
Can't agree more to that.
Yeah, I would also agree. Intersekt is broken, not just for retail investors. I think it's broken across the board. So I would love to see that fixed. And there is such a good example of it working very well in the UK. So there's no reason why we can't just copy that. Yeah. What would I like to see? Look, I think that I really believe we need to do everything in our power to fix how the younger generation builds wealth. I am included in that generation, and I think that the opportunities for building wealth are shrinking, and we need to do everything in our power to remove barriers for people to invest in what they want to invest in, provide education around how to build wealth. The fact that we are only just starting to talk about putting like basic finance 101 in the curriculum in high school level is absolutely bonkers to me. Like what? We're not teaching kids how to like have a budget. And then we're wondering why they're struggling when they leave home, which is also too late apparently. So I think my push there is how do we help educate people in a financial sense to help them build wealth earlier and faster and better and stronger.
Make sure you check out Cheryl's podcast.
Oh yeah, I will do a short plug for First Check on Spotify, Apple, whatever streaming thing you want. Search First Check. That's our investing podcast.
Thank you, Cheryl. So for me, it's easy. We hope to be, we meaning us, alternative financing or different type of capital provider. We hope we can be the bridge between the mass market and the financial institutes or the big boys. Because we do need LPs. If we don't get the bullets, how do we deploy and help the mass market, right? So, however, the mandates for a lot of these big boys, FIs, it's still very rigid and conservative. And we're not trying to compete with them for sure, but we're trying to open up a new space where it can be beneficial to all three parties. But it takes time for to do market education, upward and downward as well. So this is my wish list. Yeah.
Thank you so much, and that's all we have time for today. Thank you so much for your Inside panel.
Thank you.
Thank you.
Thank you to Michelle.